Morning all, and welcome to the market view for Monday the 17th of March 2014. And kicking off with the daily chart, we can see that the market for Friday, which is this bar here, traded lower, found support at that 165.82 that we've had drawn in for the last few days, and then moved back to the upside, also moving back up above the psychological level there of 166. So the market finding support at 166 to the dollar there. So the market back above the 76%, but for those of you that may have noticed, I'm just going to remove all of these other lines. I just want to show you why the market stopped in this area during Friday's session when we had a potential short signal. So what I'm going to do is to click on markup and then go to annotation and to the fib retracement. Now if you measure from the low to the high, you will see the market trading back to the 76% area there, then just through and then coming back. So again, the market finding this 76% an area that it didn't want to close below, went down to the recent low and then turned around. So what the market can do on occasion, instead of trading to the 76, it will trade through, go to the recent low, and then trade back and close above both there. So the market trading down to 165.82. If we have a look at the 30-minute chart, you can see that we had a potential short there, and the market trading down to the low there, which is 165.85. Go back to the daily chart, and you can see there 165.82. So you can see why the market found support in this area with just about a maximum of about 23 pips, and then turning around and moving back up to the upside. The first four signals were actually failures. For some unknown reason, this one has shown up now as a loss, but you wouldn't have been in this one anyway because we had the release of the economic news items on Friday. But oddly enough, that same thing again, where having reloaded the chart, this one actually appears as a loss. And I can see why, because obviously the market traded below the stop level that would have been in place. But at the time when the chart was open, that didn't show up, which is something that we need to address, which, while I'm thinking about it, there is a new version of the software available as well, so maybe that's been sorted in that as well. So we had all of these signals where the market was sideways on Friday, then we had a short for 20 pips down to the daily chart 165.82. We went down to 165.85. So again, this is why I point out these larger time frames, support and resistance areas for you, is so that you are aware that the market could change direction at those points, and it allows you to actually either move the stop to break even or get out. And there you can see the 166 area as well. So the market turned around and moved higher during the rest of the trading session. It took some time, but the market did manage to go on to make 20 plus pips on the upside as well. So not a bad day for Friday at all. Let's have a look at the news items that are coming out today. Apart from the Ukraine Russia situation that's in the background, we've got no high impact news items today. I was just looking through there just to see what we've got. We're still out of kilter as well with the time zones. We go forward an hour, I think, this coming Saturday, or maybe even the week after. I think it's this Saturday. So this will put all of the times back to the what we're used to, where the US news is released at 1:30. But this week again, it's still going to be 12:30 p.m. So another week of being out of sync until we move to the British Summer Time settings, which I think happens this weekend. And really that's about it for this morning. There's not an awful lot to report. Good day on Friday after the market eventually broke, trading down to the support areas that were shown. Let's just have a look at the daily chart. Let's just draw up a few target prices before concluding today. Let me throw a few on there for you. We have this high to the left here. We've got this low as well. Let me just remove this fib. And what I'm going to do is to draw in the high to this low. This gives us an upside target of where the market should move to if prices do move to the upside. 166.85, which is just going to be before the 167 psychological resistance as well, and we can see the market came back through that on Thursday as well. So if the market does move higher and we have a potential buy, watch for 166.85, 167 to begin with. If there's any more on the upside, it's going to be from there to there, and these are the other areas. You can see the 167 there now in place with the line here, and then the 76% there as well at 167.32. So we'll leave those on there. If the market goes short, then we can expect, just draw this one back in for you. We've got from this high to this, actually let me just delete these, make it clearer for you. We've got from this low to this high. I'll have to reactivate the button. There we go. So from this low to this high, we've got 166, bang on the line there for the 76%, the psychological level, 165.82 as well. And then if we move through this area, what I like to do is to pick off the lows to the left there. So again, I'm not going to go into too much detail. I'm just popping these on the chart for you so you can see where the market's likely to stop. And again, we've got 165.61, which of course we've got the 165.50 psychological area. Through there it takes us down to 165.11, but again 165 psychological also in this area as well. It's a big move down to here, but it's worth having these areas of support and resistance on the charts because they work so well, which you've seen in the market view during the last few weeks. Well, that's it from me for this morning. Have a great day. Let's hope the sunshine continues between now and December and warms up a bit in between. That would be marvellous. I will speak to you tomorrow. As ever, thank you for your support, and as ever, thanks for watching.